And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for the MetaTrader 4 and MetaTrader 5 platforms, and just in general becoming a better trader. And as I learn more, I share it here on this channel, so you can become a better trader too if you're a trader. If you're not a trader, then you probably just you probably check out our shorts that we do when we're on vacation and stuff like that. I do have a vacation coming up in sunny Florida. It might be rainy Florida. We don't know yet. We're not there yet, but we'll find out when we get there. It might be sunny and rainy Florida. As my memory recalls, they have a big downpour of rain about 3 o'clock every day this time of year. Then again, who knows? We'll see what happens when we get there. But in the meantime, it's Wednesday, July the 15th, and we are just about, the Bastille Day is over, and all the French people went back to work today, I guess. I don't know what they do there. But I've never been to France. But other than that, we don't have it's time to talk about some stuff. We do have US PPI coming out later on today, which is Producer Price Index, which usually adds as a confirmation to the CPI number that came out yesterday. We'll talk about that now. But first, since we're talking about making money in Forex, we need to talk about the inverse, which is losing money in Forex. And you can definitely do that. That's called risk. And you need to know about these risks. They go like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. You only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, carefully consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into what we're going to talk about today. Look at that. Here's the MQL5 marketplace. This is so let's talk about me some more. Michael B. Neely is me. That's how I did that. I set this account up, and I haven't been able to change. I set this up in 2020, I think. But at any rate, and I didn't get serious about it until just recently. But at any rate, this is the Bollinger Band and RSI Mean Reversion Pro for MetaTrader 5 and the Bollinger Band RSI Mean Reversion Pro for MetaTrader 4. They're both available for purchase, or you can come over here and do a free demo on them. We've had 6 demos so far. Haven't even made a video on them yet. I'll probably do that soon. Need to do that soon. So that's the MetaTrader 5 version, and it's the same for MetaTrader 4. And yep, 6 downloads there too. So we're both at 6 and 6. I want to look at that number real quick at my platform. Settings, I don't think that's where I go. Or profile? Maybe profile. Oh, here we go. It's over here, market and my products. It's right here. And 6 and 6. Yep. So we still have the same number of things going on there. Ranked number 2,300 and, or probably 23,655 and 27,100. Should probably work on those ratings a little bit, huh? But at any rate, that's where we are on these. It's probably they haven't been rated because no one knows about them. I have not made a YouTube video on them yet. That's probably what I need to do. But at any rate, let's go ahead and move on to something else completely different. Let's move on to tradingforexforprofit.com. This is also my site that I am building to help me become a better trader, because I was doing stupid things with money before I started doing this in relation to the Forex markets. I still do stupid things with money, but we won't talk about that. Let's see. First, let's go ahead and see what goes on with this. First, let's look at the features. It's got a risk engine. You can risk calculator with account-aware controls. It also has a trade workflow, a planned open and closed trade life cycle, and then also prop firm trading. It allows you to track prop challenge and progress and drawdown visibility. That is also on available with a pro membership. I don't think it's available for the free version. Analytics, pair session, and calendar performance insights. I think that's also on the premium levels. And then advisory layer, you get the news aware trading discipline. I need to rebuild this page, so it's more separating everything out for Premium Pro and stuff. At any rate, or better yet, maybe this right down here. Oh, here it is. Look at that. Start for free. Upgrade when your workflow continues with more power. We've got the Pro version here, Premium version here. Highly recommend starting at the Pro version, pardon me, the free version, so you can figure it out. If you're an active trader or trader that has done things before, then you might want to just jump right into the Pro version and be able to upload more accounts. So with that, and then work with it there and see what you like. If you, see what you like, what you don't like for it, you can always contact me at the, I think it's a contact me page somewhere. Contact us. There's not a contact us page, so I should probably throw one up here. Or you can follow me at YouTube at NeelyFX, which is for this channel, and you can contact me there too and say this. I would like to see this thing change in this site, and then we'll do that. But in the meantime, that's about all I've got here. Oh yeah, look at this. We've got some more. Oh, that's that's not me. Oh, but there I am, Neely Forex trader, FIBO trend continuation EA. So I've got another private repo set up here. That's that looks like the object is to fill this board completely in right here, and I've got two little dots on it now. How about that? So now I'm working with EAs with a much faster workflow than I did before, using Forge MQL5. If you're a developer, I highly recommend using Forge for MQL5. It is a neat tool to use. It also keeps your version controlled, especially if you're building with an agent. With that, let's go ahead and get into what we're looking at today. So first, let's go ahead and go back to here. Well, I guess we'll go back to over here. Yeah, there we go. I didn't realize I had that one still open. So we'll go to the market pulse and see what's going on. It looks like we have a strong risk on today. Got the Aussie dollar very strong, and the Pacific Rim coming up. How about that? With the Kiwi following second. The loonie, the Canadian dollar following after that, followed by the US dollar, which is not the number one driver. Swissy after that and falling. Euro falling, pound falling, and the yen very weak. So let's probably due to the forex markets, pardon me, the bond market that's going on. Let's also take a look at the calendar briefly. And I want to see if the news came out. It's, some of this is automated, and I want to head to automate it because I am not in the office 100%. It says pending. I gotta figure that out. It is no longer pending, by the way. Can we get the BLS release posted? News. I do not see the BLS release. Okay, so we have something else going on with the news thing on this that we need to work on that workflow some more. Oh well. So we had a big number change on the BLS yesterday. I needed to do that before I started this video. Oh well. So we'll just go straight into it. The calendar for today goes like this. The core PPI number is coming out today, along with the core PPI number. It's usually taken as a confirmation on what the CPI was, which came out at 2.4% yesterday, much lower than expected. And a lower CPI number means a lot of things. Also, the Canadians are going to figure out what they're going to do with their monetary statement and their overnight rate. That's going to be, they're expected to hold. We'll see what they actually do. They probably will hold. I don't see them hiking into a recession like they're doing right now. Fed Chairman Warsh testifies again. That'll be some kicks. And then the BOC press conference comes out at 10:45. So that's all we've got for today's news. Let's get straight into some charts. I had a new one, by the way. I like it. I like it. Let's start off with Bitcoin. Why not? Bitcoin's a good place to start because it's a, why not? It's begins with a B. We're at 64,696 today. Not really breaking out of anything. Still looks like it's got a big cap on it right at about 65,000. So no one's letting it get above 65,000. Maybe for good reason. I don't know. I don't trade Bitcoin. Let's go to the US 10. US 10 is still above 4.5%, which is not good for US consumers. However, the CPI number did come down drastically yesterday. I think that was due to the large decrease in energy prices last month. But those are right back up again, so we'll see what happens with next month on that. We don't need the Canadian 10-year. Just kidding. Have the Japanese 10-year right here, and it is starting to find some ground right here at hit the bottom at the 2.658, and it is going to start taking off again. Then again, it might come down. If it starts coming down, then the yen carry trade will be alive and well. What do I mean by the yen carry trade? This is what I mean. This is the US 10-year yield right here, and this is the Japanese 10-year yield right here. This gap is where a lot of people make money on that. They convert dollars to yen to dollars, and then work with the dollar currency and forex. That would be the pound versus the yen. Pardon me, the United States dollar versus the yen, and hold on to it. And then every day at 5 o'clock, you get paid this difference in the interest rate. That is what the carry trade is, and it's not breaking down. A lot of people have been screaming that it's going to be breaking down and blah, blah, blah. Not really. It's far away from being broken down. As a matter of fact, it has not come close to breaking down since COVID, so we're not going to even talk about it anymore. Dollar versus the chef. We don't want to talk about that. Let's talk about this. Euro versus the pound. Oh, I did it again. Cue Britney Spears. Oops, I did it again. Oh, well, we'll come back over here. There we go. Euro versus the pound. Euro versus the pound is still flat from yesterday. Tremendously flat. Look at that. Right at the same place it was yesterday. So the euro versus the pound is not really going anywhere. They're still tied. It's a tie. France beat Spain. Spain beat France yesterday. So that was a downer for the French. Oh well, sorry about that, guys. I picked France to win it all, but guess I was wrong. DXY is still at 101. About the same time every day. It's at 101. I mean, within just a hair of each other, and then it moves throughout the day and goes back to 101. It's very strange how that's happening, but it seems like it's at 101 every day that I do this video. Also makes for some really boring trading too, or some non-trading because you can't find a trade. Euro versus the dollar. Also, that's the inverse of the DXY, and it's not going anywhere either. Worth talking about. Pound versus the dollar. Nope. Again, not really going anywhere. 133, 134, right under 134. It's bouncing up and down about 15 pips over the entire day. Yesterday's candle has a range of 30 pips. No, a range of 50 pips. So you could time it, but you'd have to sit here and stare at the chart all day long. And that's not how we do things. Dollar versus, that's not how I can do things at this point in time. I'd love to have that type of time, but I don't. Even if I didn't, I wouldn't. Let's see, the dollar versus the chef right here, 0.81. Not really a whole lot going on there either. Kind of coming back after yesterday's CPI shock. You can see the CPI shock right there. Oh yeah, something else we're going to talk about. I meant to talk about and didn't, but that's okay. Time to talk about the yen pairs. We have 162.39, 162.30, and not really going anywhere. 40 and not really going anywhere. Dollar versus pound versus the yen. I should have probably gotten in at 116, huh? But I didn't. So it's up 126 today. Wait a minute. Am I saying that right? Up 140? Up 127? I am saying that right. I'll be darned. No, it's up 14. 14 pips. And 13 pips. And 4 pips here. Yeah, okay, sorry. My balls those are pipettes on the end. And then the CAD versus the yen right here, we have 115.43, and it's starting to perk up a little bit more too. But that's also because of the oil trade. And then let's look at a new one, the Aussie versus the yen. So this is our new friend, the Aussie versus the yen. And this is what I might be. I'm going to be testing one of my EAs in the Aussie versus the yen. So let's see how that works. So FIBO reclaim, if you will. Because FIBOs are not magic numbers, but when the large algorithmic programs are trading in FIBOs, then you want to pay attention to that. All right, let's look at NYMEX crude oil now. Here we have $80 per barrel. Not fun for anybody. That means that CPI next month might be marginal. It might be greatly different because last month it came. Well, maybe not. Who knows? Maybe it won't be. 'Cause it's not really going through the roof gangbusters right now, even though the United States is bombing the literal hell out of Iran because they need it. Let's see. Dollar versus the Canadian right here, 140. Aussie versus the dollar, 69.80. Still not finding any ground over 70, but it is perking up a little bit. Did have a nice big perky day yesterday. That was a good. If I had been in the office around 8 o'clock, it may have been a decent trade, or if I had played the straddle on the news, which I don't like to do. I've been burned on that before, but these days the straddle move on the news might be a good way to go, considering that everything is algorithmic now, and when it pops, it doesn't pop up and pop down and pop in the direction it wants to go in like it used to. So I think that's a hangover that I have from manual trading. The reason why I don't straddle the news. Gold. Gold's 40, getting into the precious metals now, 40.33, not really going anywhere. Palladium, right there. Oops, I mean platinum. Palladium is here. Also not going anywhere. Silver, not going anywhere. And the software sector yesterday, big surge in the software sector, or at least the IGV. However, none of its components went anywhere. This is not all the components of the IGV, so some of them did better than others, clearly. HubSpot off 3.6%. Salesforce off 2%. Intuit off 2.5%. GoDaddy, which I'm not sure if it's part of that mix or not. Right there, 0.26%. Adobe, looks like what you need to know. Okay. Off 4.26%. And upward getting clocked again. It says red, but that candle says green. That's sus. Oh well, let's go ahead and look at the Magnificent Seven right here. Had according to this, according to the ETF, they did all right. They did yesterday. They did all right. Google is up almost 2%. Amazon flatline for the most part. Apple was off 1.72%. 0.75% basically. Meta was up about 0.5%, a little over, well, about 0.2%. Microsoft off 1.5%. Nvidia off 4%. Tesla a little bit over flatline, and SpaceX. Wow, struggling to get back over to initial offer. It's got a long way to go before we get there, but who knows? We hopefully we'll see SpaceX do better. But with that, that is all I've got for today. If you have any questions about this video, then by all means hit me up in the comment section. If you want to see more of these videos, then subscribe to the channel. And if you like this video, I like it. I'm going to give it a thumbs up. I think you should give it a thumbs up too. Then give it a thumbs up and we'll go from there. With that, that's all I got for today. You guys have a great one. Oh, no, it's not. No, it's not too late. Yeah, let's go and do this. I want to show you the difference of what happens with the CPI shock. CPI yesterday was showing about, CPI came in at 2.4%, indicating that inflation was not in the economy as much as originally indicated. We saw this change drastically yesterday. It was around 66%. This is the Fedwatch CME from the CME group, Chicago Mercantile Exchange Group. I think it's what it stands for. It was at about 66% of a hold and 33% of a rate hike. Well, now this is completely changed. Now we're looking at an 85% chance of a hold and a 14% chance of a rate hike. And why is this important? Because this is the meeting date is on the 29th of July. So we've got a lot more indication of what the Fed is going to do, which is a big indication of what's going on with everybody. So that's now That's all I got for today. If you have any questions about this video, then hit me up in the comment section. If you want to see more of these videos, then subscribe to the channel. And lastly, if you like this video, give it a thumbs up. I would appreciate that too. So with that, that's all I've got for today. You guys have a great one, and I will talk with you later. Bye.